All right, let's hit the road and take a deep dive into IRB Infrastructure Developers Ltd.
It's good to me.
You wanted to know how they performed in Q2 of FY25, and we've got all the essentials to break it down.
Oh, yeah.
Their press release, stock exchange filing, and we've even got some analyst questions that are, well, pretty interesting.
Yeah, they're good.
Get ready for a wild ride, though.
Why is that?
IRB is a major player in India's infrastructure scene with projects all over the place, 12 states.
Yeah, that's right. And it's not just about building roads. They're managing them, collecting tolls, the whole 9 yards.
They're involved in a bunch of different projects using different models, too.
BOT, TOT, HEM. We'll be sure to explain all those as we go, don't worry.
Okay, so let's start with the big picture. What's the headline news from IRB's press release?
Well, it's kind of a mixed bag, you know.
Oh.
On the one hand, their total income dipped like 7% year over year, ending up at Rs 1,752 crore for Q2 FY25.
Okay.
But their net profit actually went up 4%, reaching Rs 100 crore.
So their revenue's down, but their profit is up. That's not something you see every day. What's the story there?
Right. It's interesting.
And what about that 25% growth in toll collection they were talking about? That seems pretty impressive, especially year over year.
Yeah, that is interesting. And it might point to some changes in how IRB's doing things.
Oh.
The press release doesn't really give us all the specifics, but the analyst questions definitely hint at a deeper story.
Like what?
It seems like investors really want to understand where IRB's revenue is coming from.
Makes sense.
Remember, they've got a lot of different projects. Some are up and running, bringing in toll money, while others are still being built.
So that 25% jump in toll collection, especially with the monsoon season probably messing with travel, it seems like those assets that are already operating, those are doing well.
Right, but then there's that drop in construction revenue that needs more digging.
So maybe they're shifting gears, moving away from just building new projects and focusing more on managing the ones they already have to make more money. Possibly, yeah.
Which would explain why revenue's down, but profit's still up.
Exactly.
Fascinating. Okay, let's talk money, their financial health.
Sure.
Those analyst questions really hone in on IRB's debt.
Yeah, I do.
Infrastructure projects, they gobble up cash, so how they're handling that debt is super important.
Totally agree. Analysts are really trying to figure out things like their leverage, their refinancing plans, and how those rising interest rates might be affecting them.
Yeah.
Well, the press release and the stock exchange filing, they don't give us specific numbers, unfortunately.
Oh, so we're kind of in the dark.
A little bit. But the fact that analysts are asking these questions,
What about it?
it tells us that debt is a big thing investors are worried about.
It's like trying to understand a company's fitness plan without knowing how much they weigh or what they eat. We need more information.
We do.
Speaking of information, what about that EBITDA thing? It keeps popping up.
Yeah.
And I know it's important for understanding how profitable they are, but can you break it down for our listener? Absolutely. So EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Catchy.
It's basically a way to see how profitable a company's operations are without getting bogged down by all those other financial factors.
Okay, I'm listening.
Think of it this way. You've got a lemonade stand.
Lemonade stand.
EBITDA is like figuring out how profitable your lemonade stand is without worrying about the cost of building the stand itself.
Okay, so in IRB's case.
Well, their EBITDA actually went up a little, 1%, reaching Rs 933 crore in Q2 FY25.
So even though their revenue went down, their core operating profitability is holding steady.
Yeah, at least if you go by that EBITDA number.
But like you said earlier, we really need to look at those financial statements to get the full picture, like how they're dealing with debt and break down where all that revenue is coming from.
Exactly.
Were there any unusual costs this quarter? Any surprises that could have skewed things?
That's a great question, and it's something analysts are definitely asking about too. They want to know if there were any one-time charges or unexpected expenses. We'll be looking out for those in the financial statements for sure.
All right, so we've got this interesting picture emerging, maybe a shift in how IRB is operating, construction revenues down, toll revenues up, profitability looks okay. But there are still those big questions about their debt. Now, let's talk about those different project types IRB is involved in, those BOT, TOT, and AM models.
Yeah, let's do that.
We already know what those acronyms stand for, but what hints do we have about how those projects are actually performing?
Those analyst questions, they're like a roadmap. They point us to the areas investors are really focused on.
Okay.
They're specifically asking about how much money each of these models is bringing in, trying to figure out which ones are driving growth and which ones might be lagging behind.
It's like trying to figure out which ingredients are making a dish taste amazing and which ones might need to be adjusted.
I like that analogy.
Thanks. Okay, so we know investors are really interested in how each type of project is doing. But let's step back for a second, consider the bigger picture. How might the overall economy and what's happening in the infrastructure sector be impacting IRB?
That's where understanding the whole economic context is super important.
Right.
Analysts are really interested in how things like inflation, interest rates, and how much the government's spending on infrastructure are all affecting IRB's bottom line.
Yeah, those big infrastructure projects are super sensitive to any changes in the overall economy.
Exactly.
So we need to keep in mind those economic winds blowing around IRB. High inflation, that means higher construction costs, potentially squeezing their budgets, but then more government spending on infrastructure that could help them out, give them more opportunities. It's a complicated situation.
Definitely.
Speaking of complicated, IRB's management mentioned something about pace consolidation. That really caught my attention. What do you think that means?
What's interesting is that it could mean a change in strategy. IRB's been around for a while, over 25 years, so they've got a lot of experience. This pace consolidation comment makes me think they're focusing on making the most of what they already have going, maybe being pickier about new projects and trying to get the most out of their current portfolio.
That's smart, especially with all those economic factors we were talking about.
It makes a lot of sense in a competitive market.
It's like they're shifting gears, moving away from a rapid expansion mode to something more strategic, more efficient.
Yeah, I think that's a good way to look at it.
So we've got these pieces of the puzzle in front of us. Revenue trends, profitability, those debt questions, those interesting project types, and this pace consolidation strategy. Before we move on and try to uncover more, let's take a minute to go over what we've learned so far. What are the most important things for our listener to remember about IRB's Q2 performance?
Okay, great question. Here are the key takeaways so far. IRB reported a 4% increase in net profit. Even though their total income dropped by 7%, toll collections showed strong growth at 25% year over year, which suggests their assets that are already operating, those are doing well.
Right.
Now, the reasons behind that overall revenue decline, those need more investigation. It could be because they're shifting from construction to more of a focus on operations, but we need to see how that revenue breaks down.
Agreed.
EBITDA, that stayed pretty stable.
Right.
But we really need to see those financial statements to get a handle on how they're managing their profitability and debt.
For sure. What else?
Well, analysts are laser-focused on IRB's debt, their upcoming refinancing plans, and what might happen with those rising interest rates.
Yeah, that's a big one.
Management mentioned a potential strategic shift toward pace consolidation, which seems to suggest they're prioritizing optimizing existing projects and maybe being more careful about new ones.
Interesting.
And of course, we have to remember those big economic factors like inflation and government spending on infrastructure, which could have a big impact on IRB's performance going forward.
Right. Those external factors are always playing a role. Fantastic summary. And before we move on, let's not forget those potential risks we touched on.
Oh, absolutely. Those are super important to keep in mind as we dig deeper.
Like what?
Well, remember, we talked about how competitive the infrastructure sector in India is getting, the potential impact of raising interest rates on IRB's debt, and the fact that large-scale infrastructure projects always come with some uncertainty.
Right. There are always unforeseen challenges that can pop up.
Exactly. So we need to be cautious as we learn more.
Okay, listeners, time to put on your detective hats.
Why is that?
We're about to unlock the vault and dive headfirst into IRB's financial statements.
Let's go.
Stay tuned for part 2, where we'll analyze those numbers, search for clues, and try to answer the big question. What's in store for the future of IRB Infrastructure Developers Ltd?
Should be interesting.
Welcome back to our deep dive into IRB Infrastructure Developers Ltd. In part 1, we talked about a potential shift in their operations.
Yeah, with construction revenue down, toll revenue up.
Right, and we still have those lingering questions about their debt and that pace consolidation strategy.
Lots of questions.
Now we're finally ready to dive into their financial statements.
Let's do it.
Did those statements give us the missing pieces of the puzzle?
They did. Like, remember how we were wondering about that breakdown of their revenue?
Yeah.
Well, those statements show that construction revenue took a major dip this quarter. Probably a big reason for the overall decline in revenue.
Makes sense. It makes those comments about pace consolidation even more intriguing. Are they deliberately moving away from new construction
Impossible.
and instead focusing more on managing those existing
If
projects?
they,
It's like they're saying, hey, let's make the most of what we've already got.
right, focus on the garden you've already planted instead of starting a new one.
Exactly. And the numbers seem to back that up.
Yeah, the financial statements also show a big jump in revenue from their toll operations, which lines up perfectly with that 25% growth in toll collection we were talking about earlier.
So even though construction revenue is down, those operational assets are bringing in a solid stream of cash.
Like a seesaw, one side goes down, the other goes up.
It's really interesting to see those two revenue streams playing out like that.
Okay, let's address the elephant in the room,
The debt.
the debt. Did the financial statements finally give us those details we were looking for?
They did.
Okay, spill the beans.
Mm-hmm.
What's the situation?
IRB's total debt is sitting at a hefty R's, 25,000 crore.
Whoa, that's a lot.
It is, but we got to look at it in context. Remember, they also have a massive asset base, something like ours, 80,000 crore worth of roads and infrastructure.
So it's not just about the total amount of debt. It's about their ability to manage it.
Right. Generate enough revenue to cover those payments.
Exactly. So what did we find out about how they're managing that debt?
Well, here's where it gets interesting. A big chunk of their debt is tied to specific projects,
Oh,
meaning the revenue generated from those projects is used to pay off the debt associated with them. Makes sense. Each project is like its own little business, responsible for its own debt.
exactly. It's common in infrastructure financing, but it does mean those projects need to perform well.
Right, to keep everything running smoothly. But what about those refinancing plans the analysts were asking about?
Yeah, they were curious about upcoming maturities and the potential impact of those rising interest rates. Well, the statements revealed that IRB has a bond maturity coming up next year.
So they'll need to either pay back that debt or secure new financing.
Exactly, possibly at higher interest rates.
Definitely something to watch closely. Okay, so we've covered revenue, debt, and those project types. Anything else stand out from those statements? Any other surprises?
Yeah, actually, one thing that jumped out at me was their investment in NVITs,
NVITs, what are those?
infrastructure investment trusts. Think of them like mutual funds, but for infrastructure projects.
Interesting.
Investors buy units and share in the revenue generated from those assets.
So IRB has a stake in these NVITs.
Two of them, which hold some of their operational road assets.
So it's a way for them to bring in other investors, share some of the risk, and free up some of their own capital.
Exactly. Very clever.
Okay, we've put together a pretty detailed view of IRB's performance. We've looked at revenue streams, their debt, their financial position, and we even uncovered these new NVITs. Now, the big question, what does this all mean for their future?
Well, it seems IRB is at a bit of a crossroads. They're facing challenges,
Like what?
that drop in construction revenue, the upcoming debt maturity, and all that competition in the infrastructure sector.
Right, lots of hurdles to overcome.
But they've also got some big strengths, a huge asset base, growing toll revenue,
Well,
and that strategic shift towards optimizing existing projects.
it's all about balance, right? Opportunities and threats.
Exactly. So which way will the scale tip? Well, I don't have a crystal ball. But what we can do is give our listener the information they need to make their own informed decisions.
Right, empower them with knowledge.
We've uncovered the key things to watch. Their ability to refinance that upcoming debt, their success with those PACE consolidated projects, and their overall strategy in this never-changing infrastructure world.
It's like we've given our listener all the pieces of the puzzle. Now it's up to them to put it together.
And remember, the infrastructure sector is always in motion.
Right. Always changing.
New policies, new technologies, even global events can shake things up.
Staying informed is key. Okay. You ready to unlock the final secrets in those financial statements?
Absolutely.
Let's dig into those details about their capital expenditure plans, get a closer look at those NVITs, and see what else we can learn about IRB's direction.
The deeper we dive, the clearer the picture becomes.
And we're back for the final leg of our IRB Infrastructure Developers Ltd. deep dive.
We've covered a lot of ground.
We've looked at their press release, dug through those analyst questions, and really gotten into those financial statements.
Definitely a lot of information to process.
We've uncovered some really interesting trends, like those shifting revenue streams, a pretty big debt situation, and that whole PACE consolidation move.
A strategic shift.
Right. But now, the big question, what's next for IRB? What does the future hold?
Well, remember how we were wondering if IRB was maybe shifting away from all that new construction and focusing more on making the most of their existing assets?
Yeah, like really maximizing what they've already built?
Well, the financial statements seem to back that up.
Oh, how so?
Construction revenue, remember, that was down quite a bit this quarter.
Right.
But at the same time, their revenue from those toll operations,
Yeah.
that was way up, reflecting that big 25% growth in toll collection we talked about.
So it's like they're realizing, hey, we've got these great assets. Let's focus on making them even better.
Exactly, fine-tuning them to really maximize their potential.
And it makes a lot of sense, right?
Oh, absolutely. Especially with interest rates going up and all that competition in the infrastructure sector.
Right. You got to be smart and efficient.
It's a good move to focus on getting the most out of what you already have. But of course, those projects still need to do well.
To bring in the money to pay off that debt.
Exactly. Each project needs to pull its weight.
Mm-hmm.
So speaking of those projects, what about IRB's plans for capital expenditures?
Yeah. Are they going to invest heavily in maintaining and upgrading those assets?
Well, the financial statements give us some clues. It looks like they're taking a balanced approach.
Okay.
They're definitely putting money into essential maintenance and upgrades, making sure everything keeps running smoothly.
Got to keep those toll booths working.
But they're not just spending wildly. They seem to be carefully evaluating every investment.
Making sure it fits with that whole pace consolidation strategy.
Right, exactly. Now, before we wrap things up, let's talk about those NVITs again.
Oh, yeah, those infrastructure investment trusts. That seemed like a pretty smart move.
It was, bringing in those other investors, freeing up some capital.
So what else did those statements tell us about those NVITs?
Well, it looks like IRB's stake in those NVITs is doing pretty well, bringing in a steady stream of income.
Oh, that's good news.
It shows that they're using those investment tools effectively, creating value and giving themselves more flexibility.
Sure.
They're adapting and innovating, which is important in the world of infrastructure.
Okay, well, we've explored a ton about IRB Infrastructure Developers Ltd. today. We've dug into their financials, looked at their strategy, even uncovered those NVITs. But remember, there's always more to learn.
Always.
This world of infrastructure and finance, it never stops changing.
New policies, new technologies, world events.
They can all create opportunities and challenges.
So staying informed is key. Keep learning and be ready to adapt.
Exactly. So as we finish our deep dive into IRB, keep exploring.
There's always more to discover.
Maybe you'll dig into those NVITs, look into upcoming government projects, or explore the whole world of sustainable and green infrastructure.
Lots of possibilities.
And hey, maybe this deep dive has even inspired you to become an infrastructure expert yourself.
You never know.
That would be fantastic. Until next time, keep exploring.